Infinite banking is not mainstream. Why doesn't everyone do infinite banking? There's a saying, if you know, you know. Well, if you know infinite banking, you know that it is a very powerful finance strategy that provides multiple benefits to the person that practices it. Benefits that mainstream finance strategies do not provide. So, why doesn't everyone practice infinite banking? Well, I believe the reasons come down to one, lack of knowledge, two, disbelief, and three, lack of patience. I will explain each of these reasons. Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy education organization. For the past several years, I have focused on and specialized in the infinite banking concept and developing the tax-free cash growth warehouse finance strategy. If you find this to be helpful, please like this video and subscribe to this channel and share it with your family and friends. Also, please post your questions and comments here. First, I want to be clear that the whole basis for infinite banking strategy is whole life insurance and the favorable practices and the favorable tax laws regarding the cash value of whole life policies. While the favorable tax laws have only been in effect since income tax was instituted in 1913, this exceptional rules for using cash value of whole life policies by the providers have been in place for much longer. As such, those people who understood the advantages of those policies have been utilizing whole life cash values to their advantage in similar ways as infinite banking for a long, long time. But they have not typically published or shared their insights with others outside of their families. John D. Rockefeller is an outstanding example of that. He developed an expansive finance strategy around whole life cash value and taught it to his children and grandchildren. The Rockefellers continue to practice this strategy to this day. In the early 1990s, when Nelson Nash published his book, Becoming Your Own Banker, The Infinite Banking Concept, he explained the strategy of leveraging the cash value of whole life as a source of basically free personal loans. Nash's basic idea was to utilize the paid-up additions rider available for most whole life policies to increase the cash value of a policy faster than what it would accumulate otherwise, and then leverage that cash value to take advantage of investment opportunities. That's very similar to how Rockefeller used his policies. Obviously, if you can take free loans and have your cash value continue to grow with high compounding dividend interest, unimpaired by the loans, that's a very smart and advantageous thing to do. Add to that the benefit of gaining that growth with no tax obligation. Well, bonus, right? So again, if you know, you know. But who knows? And who's in a position to educate people about these things? Excuse me. Certainly, the insurance providers are the ones who know and are in a position to educate about these wonderful benefits. But for the most part, they don't. Yes, there are a couple of providers that are what they call infinite banking friendly, but they don't outright promote and educate anybody about how to design a policy for the greatest cash values or how to put infinite banking into practice. For the most part, to the insurance providers, life insurance is just that, a financial hedge against dying too soon. Not to mention a way for the insurance providers to grow their own wealth by investing their policyholders' money in its various profitable ways. At least With the mutual companies, they share their wealth with the owners of their participating policies in the form of dividends paid to the cash values of those policies. But the providers do not teach infinite banking to their agents. In fact, some of the providers actually discourage their agents from promoting infinite banking whenever it comes up. That's mostly because some agents have unscrupulously used the infinite banking idea to entice clients into buying insurance policies under false pretenses. Personally, I don't even know how that's even possible. But one provider has claimed that some agents have succeeded in selling policies to clients who did not understand that they were buying life insurance. Go figure. Anyway, if you don't know something, you obviously can't teach or explain it to anyone else. So, infinite banking isn't taught by the providers who make the strategy what it is, leaving people to learn it on their own or by accident, which is actually how I came to learn about it in the first place. The other block to general education about infinite banking is greed. You see, a properly designed policy for infinite banking is designed for the greatest financial benefit to the owner of the policy, not for the agent selling it. That is to say, life insurance is a commissioned product. The commission earned by the selling agents is directly related to the premium paid by the client. Whole life by itself, with no riders attached, pays a commission to the agent of generally between 30 and 50% of the first year's premium. Riders, on the other hand, which can greatly increase the cash value accumulation for the client, such as paid up additions, pay a commission of only 2% of the first year's premium for the rider to the agent. So if $1 million whole life policy has an annual premium of $12,000, and that's just a number for this illustration, the commission to the agent on 12,000 at 55% would be around $6,600. $1 million policy for the same person, designed properly with the cash-rich riders and having the same total premium, is going to pay a commission of only $3,400. That's only about half the commission as a standard whole life policy pays. As a result, those agents who do know about infinite banking and how to properly design a policy for it won't tell their clients about it. It requires an agent to genuinely put the interests of their client ahead of their own monetary interests in order for them to deliberately sacrifice their own income for the benefit of their client. Unfortunately, that does not describe all insurance agents. Besides a general lack of education about infinite banking being available, when a person does get introduced to the infinite banking concept, more often than not, they find it hard to believe. After all, high compounding tax-free gains, interest and fee-free loans, and your savings keep growing even while leveraged by the loans? Oh, yeah. And no repayment requirements for the loans. There's got to be some catch, right? I mean, if it's really that great, why isn't everybody doing this? And why haven't I heard about it before this? And why aren't all financial planners and insurance agents advising their clients to do this? Fair questions, to be sure. But once more, the insurance providers aren't teaching their agents. And when something is brought up to a financial planner that they don't know about, the typical response is to discourage it and recommend that you forget about it. It's probably a scam. Banks and other financial institutions that can't profit from it don't want you to know about it. They certainly don't want you to practice it. That would cut into their own profits. Then there's the lack of patience. Unless you have a fair amount of money sitting around not working for you that you can front load into a policy, It may take a while for your policy to accumulate enough cash value for you to use in any substantive way. But in my opinion, that is the lamest excuse because substantive is relative and any and every advantage is helpful, right? I mean, my first use of infinite banking was to buy a sofa. It was only $1,000, but let me tell you, that $1,000 not only bought us a really nice sofa, we still have it today, and my wife frequently comments about how comfortable it is. And all the while we've been lounging on that sofa, our cash value has been growing at a phenomenal rate, tax free. And since then, we've financed computers, vacations, more furniture, paid off credit cards, and paid cash for a brand new SUV. And our cash values are snowballing in value due to the compounding. But if you don't have a ton of money to start your account with, and you want to use infinite banking to buy a house, you may have to have some patience while your cash value grows. But I strongly suggest that you start your account and build on it rather than wait to build up your cash reserves elsewhere and then start your account. You see, as you get older, life insurance charges you more to get started, and the risk the provider takes on your life becomes greater. So if you haven't yet, get started now and start receiving the benefits as you grow your account. Designed in the right way, you can expect to have 60 to 80% of the premium you pay to be available to use by you in the very first year. And it gets to be more and more each year after that. You have questions, we have answers. We're here to help you all with all of this. Get in touch with me and let's start the conversation. Please subscribe to this channel and click the like button for this video and share it with your family and friends. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below here. The link to buy my books on Amazon.com is also below. If you'd like to apply to become a client of ours, the link to the application is also below. We're here to help. We look forward to helping you. Aloha and mahalo for watching.